All right, let's start off by following up what we talked about on Tuesday, I believe. All right, Friday, Thursday, Wednesday, yeah, around here. All right, before that, right, we mentioned that even though we saw signs of bullishness, right, we acknowledged the fact that we are still bearish, right? So let's see, diving into smaller time frames. Right, so what inevitably happened, right, is price was unable to sustain itself, right? And something that I haven't told you guys I'm including, right, is this here, right? Even though this is considered that structure break, right, I also acknowledge these structure breaks here, right? Why? Because these signify not only a continuation of the overall momentum, right, but they also provide essentially a rubric, or not a rubric, but a type of range as to continuation, right? So, right, we had the final leg to the upside be broken, right? That automatically makes it to where I'm no longer interested in a bullish bias in terms of DXY. So if we're looking at the whole leg, right, we see that price inevitably comes here, right? But I don't consider that to be a type of mitigation because we left previous equal lows. So I consider that an interruption, a disruption of bullish order flow, because it doesn't make sense as to why we bottomed out here. So any move to the upside is an unsupported move just based on theory, right? And as you can see, we inevitably reacted back to the downside. So the cool thing here to acknowledge, right, is last time, I'm not sure if we brought this up on Tuesday, right, but I was looking at the immediate range here, and I would have seen this as a point of liquidity. Why? Because this high inevitably created a liquidity grab, right? How do we know it's a liquidity grab? Right, how do we know this is a liquidity grab? Because we have a set of equal lows, right? Price inevitably comes to take out those lows and inevitably and immediately reacts to the upside, creating a bullish break of structure. So that to me is not a sign of here is not a sign of accumulation. This is a sign of the initiation of the pullback that we've essentially been looking for. So how do we find a specific range to play off of? Right, well, I'm always referencing the immediate leg when we're pro trend, right? So I'm looking at this immediate leg as a full trend, as the pro trend continuation leg, right? Whereas that is my point of overall invalidation, right? But if you go to H4, right, we see this push up to the upside, right? And then we see this wick that mitigates that candle. So that's automatically a point of reference for me. Right, and even though that was technically, I wouldn't say it was tapped there. It's too close for me to tell. Right, but overall on smaller time frames, it does look a lot messier. So I don't think I narrowed it down in real time, but let's actually see if there's anything here. Now you can see inefficiency fill there. Right, so here is your inefficiency fill based on that time frame. So as price was here, right, because I know we are full on bearish in terms of long term, right, I'm only looking for an excuse to risk here, right, and it looked a lot different on here, but I took it off of my EU bias. But as you can see, as soon as that essential push up, right, we came to the POI, we reacted, but we had not broken structure yet, right? So this is the pullback of that original range, right? We came up, right? Minor intraday high was broken and immediately reacted off of, right? Therefore, this is now considered a liquidity grab. This is now the new point of invalidation, right? So as you can see now, we had a push down, return into premium, or maybe an equilibrium, where is this? Yeah, right. Essentially, kind of like a 61.8. And in terms of what to reference, that probably could have been close to any type of candle on M5 inefficiency fill right there. Right, you can see it. Right here. Right, and then this now incites bearish order flow. Why? We had a bearish break of structure, right? We had a continuation, which solidified this entire leg down, right? Which now gave us this immediate pullback inside of a premium, which induced bearish order flow, right? So even though, right, the entire leg wasn't broken before we got that, right? I pretty much based it off of the initial break of structure, the validity of the POI, the overall structure in play, and you can see the execution was pretty decent. Like looking at EURUSD, right, so that was here, right? And I know I didn't talk about this reference point, but I didn't expect it to come so low, right? So that's the thing that I always tell you guys. I cannot make exact predictions without enough data, right? So originally, I believe we wanted somewhere. I believe I wanted somewhere in this wick here. I don't remember from Tuesday, or I believe it was somewhere in this candle, right? But the thing is, there was no strong reaction off of there. If we're looking at our scalping time frames, right, the reactions weren't necessarily too good. So inevitably, right, I had to zoom out as soon as that POI was taken, and now I'm referencing, you know, my higher time frame points of interest. So the thing is, in order to maintain this bias, I have to essentially react from this interruption in price. Why? Because in terms of theory, right, if there is an immediate range to the upside, right, then, you know, obviously Wyckoff is a study of ranges, right? But in order for us to understand that it's a range and a continuation range, we must also realize that that takes volume, that takes momentum, that takes certain action inside of that range, right? Making that a quote-unquote point of interest. So, right, the reason why I call these turbulence points is because they are interruptions in price. So I knew theoretically that if we were to break that low there, right, then that would be a disruption of bullish overall order flow, and it would pretty much kill off my entire bias, right? And I would probably be, if that would have broken, I would have been bearish to the downside. But, you know, keep in mind, we've been referencing higher time frame, well, not even higher time frame, but this specific time frame, right, as we're looking at the immediate leg down that was broken. All right, so even though I was weary of the momentum here, right, I still gave a really good reaction off of that wick. But the thing is too, right, that I'm noticing is that as soon as we came into that point of interest, as we come to the point of interest, right, I see this. Right, as soon as we have this, not only do we have strong momentum, right, but this is not necessarily mitigating anything, right? And because this was such a sudden reaction, right, I consider this to be one scalping leg. So the only way to invalidate this leg or a break of structure of this leg would be down here, right? Usually if you see anything like that, right, if you were to see that here, right, then theoretically I would love to continuation, or to have a continuation, you know, there. But because this was such an impulsive move, the invalidation point is down here, right? But because this is so fast, right, you obviously leave inefficient pricing behind, right? And I took my trade based off the inefficiency fill there. which is, I believe there's something on the 30-second too. Yeah, you could see that inefficiency fill there. Right, I took my entry somewhere around here though. But as you can see, oops, excuse me. But as you can see here, right, there is, I would consider this a disruption just due to the fact that we did not react off of anything. There, right, but we did manage to break that high, take that liquidity, right, but because we're essentially reacting off of a strong POI, obviously an H4 POI, then I'm more so inclined to see more upside because that's just our original bias, right? So my entry wasn't here. My entry was kind of like around here-ish, right, with a 3 pip there. And once this has been cleared, right, I'm obviously break even right there. With my overall target obviously being, right, my TP1 would be the immediate leg down, which is there, 40 pips. But my overall target is definitely up here. Right, this would be my first swing target. Why? Because if we take that first swing target, then we can obviously start aiming for actual highs over here. Why? Because if this reaction is in play, right, then if this low manages to break the initial swing high, then we now have an unwillingness to continue lower, right, based on this low, right, here. Right, we have now an unwillingness to continue higher, and this is now solidified as a break of structure, right, as long as we can take this up here, right. In terms of now, right, I really wouldn't want to see, you know, these wicks break. I want to see this continuation of order flow to the upside, right. I don't want to see these, right, because if we break this here, right, then we now have a bearish break of structure, right, which means that if this is not a bearish break of structure, then we have not taken out the previous high. This is now an unwillingness to continue higher, and this is now a reversal, right? But obviously we don't want that. So these equal lows here aren't necessarily too attractive to me, and they don't even look like equal lows here to me. Yeah, as you can see, it doesn't even look like equal lows. Actually, yes, it is right there. Right, there is equal lows there, but right, I'm never using my essential liquidity points as a source of where I'm deriving my bias from. I'm more so going off of structure. So yeah, this is pretty much my point of validation. Right, I don't like this immediate reaction here. Right, you could even try to consider this a type of scam too, but it doesn't really fit the narrative, and to me, you know, where it's reacting from is a bit odd. Right, which would be this inefficient pricing here. Right, inefficient pricing, reaction. Right, I believe it came back to mitigate something. Yeah, took out liquidity here. Took out liquidity, came back, then came to mitigate there, but the mitigation wasn't clean. So I don't know. I'm not too keen on wanting this to continue lower. It's not necessarily the bias I support, and there's not really much supporting it, especially with DXY being so deep. Right, as you can see, where we reacted from, H1 inefficiency. Right, but to theoretically see this extremely deep retracement create a new high is very unlikely to me, especially because we've not only have this leg in play, right? But this reaction is an unwillingness to that, right? So I would really like to see that continuation lower. Let's see what you guys are saying. There's your point of validation, yes. All right, and this was an interesting one too, GU, right? So you guys know I didn't trade this for a while, for the main reason that this market condition here is really stupid. It's not something I would trade. Is it tradable? Probably, but it's not something I want to trade. It's not a trending market, right? So the entire time this was here, the entire time this was happening, right, I wasn't too, biased to want to take that. But for the most part, if we're looking at structure, right here, right, this never broke bullish structure in terms of the highs that create lows, lows that create highs. So with that being said, right, the result of that catalyst, even though we had corrective nature, our bullish structure was intact. In effect, right, we got the showing its hand, right, and this is essentially what I waited for. Right, I wanted to see this pair show its hand. I wanted it to get out of that, very unfavorable market condition, and I wanted it to give me something to play off of, right? So we see it show its hand, right, and we see it show its hand again, right? I didn't really care for this initial one, but this is very much so a very tradable range, especially because we have, like I said, corrective nature. We've now broken out of there, right? And given the reaction to downside, given us that essential discount premium, not that premium, that discount based off of the immediate range here, but in the overall range, it didn't even give equilibrium, right? But as you can see, once again, right, the final interruption in price created that high, came back to that interruption, right, as you can see. So, right, with that being said, that then comes the scenario that I showed you guys in previous markups, right, and we saw two interruptions in price, one on a smaller scale, one on a medium scale, right, but this, right, was very off to me just because I saw equal lows sitting there, right, and obviously in order for us to come back here, right, we need those bearish breaks of structure, which is there, right, and because of this, we now have bearish order flow in play. So maybe naturally that order flow was meant to target these equal lows and meant to originally target, the next turbulence point, right, which is pretty much what happened here. We came back, I believe, to fill an inefficiency there. Yeah, the overall inefficiency, right, and then that's where the markups start, right, as you can see here. Break of structure, premium, release. All right, so this is a pretty cool setup, but the main point here is definitely to let it show its hand. It's always to let it show its hand. Right now we're actually in a trending market and something that makes sense. But this could easily start to pull back, sometime soon, just for the simple fact that, right, we have this continuation here, right, and if that breaks, then we have bearish structure for the most part, right? EG keeps going. I'm genuinely not surprised. This is, this is just the effect of the 6 month wait, right? This is the effect happening of the almost, what is that, 230, that's about 7.5 months, right? The entire 7.5 month wait, right? That accumulation that took so much time, or distribution, has now caused this massive release. So it's only intraday continuation on intraday continuation, right? Similar concept to this, whenever this happened, right? Whenever the 60-year accumulation happened, you see how it was pretty much just swing continuation on swing continuation, right? Speaking of this, though, we finally did take that low out. I'm pretty interested to see if we're going to reach lower or if we're going to react off of that liquidity grab. But yeah, hopefully you guys get what I mean. right? All this is just a release, right? And I guess it's the same concept as GU, right? Remember when we had this corrective nature here, right? We then it then showed its hand, it gave that pullback, right? Filled out that inefficiency there, right? Broke structure again, mitigated wherever it mitigated, and then continued lower, right? Same concept as GU. But I mean, other than that, nothing much has changed, right? We pretty much called this to the T. Right, I believe price was like around here-ish, and we got price to the T, and you know, it's obviously in play currently. So hopefully we take out those equal lows soon. And if we break those equal lows soon, then obviously we can all target this low. Hopefully, yeah. I mean, it just makes a lot of sense. It makes a lot of sense, right? DXY isn't known for retracing that deep, so just selling is just, in terms of longevity, it doesn't make sense. Right, and I hope you guys are getting like what I mean with like longevity. Like for example, were there very, very nice EU sales throughout the time I've been waiting for this buy? Yes, 100%, right? But if you're trying to think from an actual investing POV, right, the reason why, I think we covered this last Zoom, the reason why investing is seen as such a bad thing, I mean, as the reason why day trading is seen as such a bad investment is because we're focusing on short-term fluctuations, which is why I focus more on trying to swing my trades and look for overall big moves, because in the long run, that's what's going to pay more. Right, I can continuously try to sell intradays and scalping scenarios, right, but in the end, there's no longevity to them, right? And at the end of the day, I'm not trying to be in so much risk exposure in comparison to, you know, what you should really be looking at as an quote-unquote investor. Right, so there sell-offs here. Yes, massive sell-offs, right? You could easily get 1/50s off of those, but I care more for the overall moves. I care more for moves like this that can generate taking out these highs, right? Because now I trade less, I hold longer, right? And it's a lot less stress. But yeah, in the long run, would like to see this high be taken out. But yeah, other than that, do you guys have any questions? Anything you guys want to talk about? Been going for 20 minutes already. Anybody? Actually, let's see who's on the call. A lot of the OGs are in here. UCAD direction. I don't trade UCAD. Yeah, I mean, I don't know if I said it was still bearish, but it was still bearish. I know Sean's in that trade. I don't remember what I said about this though, but I know what I told you in our conversation. All right, was this 50% here? Kind of, not really, right? But the important thing here, right? Overall bearish, right? Then inside of that overall bearish, we have this, right? Premium, bearish order flow. Yeah, very neat. So yeah, yes. Came back to top that inefficiency there. Extremely clean. and that is about 120 pips ish, right, when you're aiming for targets down here. Flag breakout. I don't see a flag. Oh, okay, I see. I guess this is what people wanted out of. I guess that's what people wanted out of this right here. No, because it's Monday. I don't trade Mondays for the most part. But I should have hedged. I don't know. That's a bad thing too with me about trading pro trend. Is I don't really like hedging against myself when it doesn't make sense in terms of the overall scale. Yeah, personally I wouldn't. Yeah, I would like to see this just go. Because I mean, remember last week, right, I believe this was here. Where is the new week? Right here, right? Remember what we wanted? I mean, I believe a week open is around here, and we wanted this to continue lower to then go higher, right? But inevitably it did this, right? Gave us a new higher high, right? That actually broke structure and validated this a lot more. So hopefully that happens here. If we create that essential higher high there, right? Then this to me, right? This reaction here did not have enough bearish order flow to continue us to break structure or interrupt order flow. So I'd like to just see that continuation. Right, I don't want to see those lows be taken. Doesn't make sense. Just like it's the same thing here. It didn't make sense for it to go from here, right? Even though we did create that new high, right? It just didn't theoretically make sense when we have a POI down here. Well, actually my POI was around there. So yeah, as long as it makes sense. That's pretty much what I care about. Like, for example, when it was around here, right, I knew that I wanted it to go into. I knew that I wanted it to go into 2140, right? Why? Because if we're able to break here, right, then I consider that a disruption of bearish order flow. So this cannot be considered bullish on this scale. So 6-hour inefficiency. Don't have that. Is that what you want there? Right around 2100. Yeah, so pretty much at the high here. Yeah, who knows? Maybe. Maybe. Also on your higher time frames too, I don't really like this. At the ton of supply comparison to your demand. Well, are you trading to have a nice screenshot, or are you trading to make money? Oh, I'm asking you, bro. Just because I'm assuming that's what you do. If you're asking. Kind of defeats the purpose though if you do that. Yeah, it just kind of defeats the purpose. Let me check something out here. Alright, just eyeball this. Right, that just reacted. So, best case that moves. Improbable, but who knows? I just can't wait for this to leave this overall range. That's what I'm waiting for. So we can have another move like that. That's what I care about. And then we can finally take these highs out. Right, because if you want to consider this a type of turbulence point, we've already reached it here. Like around there. We already reached that, so the reaction was unable to take out structure, so we can inevitably aim for up here. Yeah, do you guys have any questions, or do we end it off here? Yeah, I gotta go to the gym right now. Man. Super tired.
Thanks, bro.
Does weekly diminishing worry for you for EU? No. No, because like right, we have, essentially an indecision candle. This is exactly the type of closure I wanted for this week to induce that high momentum, because for example, we had a rejection, right, on diminishing volume in comparison to this. We had a bullish candle that didn't have low volume, right? Now we have a bearish candle with decently high volume, but it's actually a rejection wick. So that kind of just incites me to believe we're going to see higher movement. Right? Because look at the last time right here. Like, for example, there's high supply, low movement. So that's showing too much effort to want to give you downside. And the thing is, though, is like you don't want to get that confused. Like, for example, here, right, you see high volume, but there's low movement, right? But what I'm doing is I'm correlating what I'm seeing with the overall bias, the overall structure, the overall narrative, right? So it really helps eliminate a lot of the noise. That's literally what I did this week, bro. I try to predict closures. That's how I used to get like a ton of my really good entries, right? Because I acknowledge timing too. Like, for example, if I want to get a good H4 closure in overlap, I'd like to get an entry in between 8 to 9 a.m. Because if that's the low of the candle, then that gives it enough time that by 12 p.m. it should give me a really good closure if it's gonna work out. That's just being intuitive about it. And that's pretty much how I used to always get my trades, is going based off time. It's a really different approach, and it's kind of hard to do, but you eventually start seeing it. Yeah, you just have to correlate volume and momentum, volume and what the candle is doing. If there's high volume on high momentum, then I'm not trying to look for the reversal just yet. But just because one candle has that and the next candle, in order for that to have a good closure, I'd like to see that second candle take out the low of the previous candle if you're looking for buy, per se. If If the next week is a nice bullish candle, normally always leaves a small tiny wick. I don't really care for that. I care for the actual composition, the size. I care to see a large body, small body, where it's reacting from, how it fits the narrative as a whole. But I mean, for the most part, this really looks like it wants to go. Yeah, in your moon, yes. Yeah, like honestly, this has so much space. Right, so much space to cover. Right, I would like to see a reaction here. Give me that. If you notice, a lot of my potential POIs always come from interruptions. Yeah, definitely a target for the week. Definitely. Yeah, because if we take this high out, we'll definitely take this high out. Right, because if we take this high out, right, like we said, that's now an unwillingness based on this low. And if we have an unwillingness here, then that means there's an unwillingness in this leg. And if there's an unwillingness on this leg, right, and we give a strong reaction, right, then this is now a solidified higher low compared to this one. So it's pretty cool how it all kind of realigns. But the thing is you don't know until that actually happens. Yep. Exactly. Somebody got Alexi that has a $600 million investment fund. This company do like schools. 30% 2020. Well, the thing is, it depends on what type of fund it is. Right? There's different types of funds. There's funds that focus on specific assets, and there's funds that try to diversify as much as they can. Like, for example, a full portfolio shouldn't be just Forex.
I was thinking. He said he was 13% up in 2019 and 22% up in last year.
Yeah, it's a lot of money.
Yeah. So, but I was thinking, why didn't start Forex? He actually is a friend of my parents. He worked at the bank as tax manager. I think this is, I don't know how to say in English, but so I showed him the portfolio from, not portfolio, but my Forex book from traders that I know, and I showed the one that you posted for us, and he said this is massive and he don't think it is possible because, I mean, we aren't talking about 50% or 100%.
Well, you also have to realize, bro, that this model, if it's shown to like any type of higher term investor, it'd probably be looked as a joke. And bro, and when you're looking at a fund too, it's not about buying and selling margin, because you know that's what you're doing here, right? A fund will not use leverage like that. They won't use 500 to 1, 1 to 200, 1 to 300, right? The regulation only allows a certain amount of leverage, and it also allows only a certain amount of risk profiles. Like, for example, I promise you, he's 13% up, but I promise you that a lot of his positions are massive stop losses, and they're probably 0.25% risk at best, you know? So in reality, that 13% is actually like a 50%. In terms of RR, it'd be like a 1 to 50 in total. Well, not a 1 to 50, but a 50% gain in total if it was like on a 1% risk percentage. And it's like 22% would probably be like close to 100%. Like, you have to understand, it's not about buying margin in the fund space. It's about buying contracts. And you also, it depends on what kind of funds you look like. Like, the only model of a fund I can think of is long short, where essentially a percent of your funds go to, you know, a various amount of things, whether it's AI, whether it's physical commodity trading, whether it's trading equities, whether it's trading bonds, whether it's you know, actually putting money into currencies, right? So
Yeah, I got you. Do you know what is Bloomberg?
Drago's teacher? Who's my teacher? I'm sorry. Who thinks intraday trading is a joke? Oh, my professor. Say professor. Say teacher. Yeah, say professor. No, 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 no. He thinks day trading is a joke, not intraday trading. I was like, hold on. Okay, continue. And you also have to realize, bro, it's completely different. It's a completely different thing we're doing here. A fund is not gonna use 3 pip stop losses. You know, it doesn't make sense. There's too much risk exposure, and your probabilities of losing is extremely high. So what I'm doing is I'm using these methods to build my type of capital up, to then go do whatever the fuck I want. You know, it's a completely different approach, right? Because from a professional approach, what I'm doing is essentially a joke. And please don't go around showing my stuff, just with all due respect, please.
No, yeah, of course. I didn't cite who it was from. I was just explaining him.
And then what did he say?
He said just he don't. I mean, he never saw something like that. And I was trying to explain what was forex for him, and he was like, "Okay, so this is for introduce another thing. Do you know what is a Bloomberg monitor or Bloomberg system?"
A terminal.
Yeah, Bloomberg terminal.
That gives you access to news and stuff before the news comes out, and those cost
exactly
$20,000 a year or something.
Yeah, he had 2 of these in his company.
Yeah, I mean,
and he was talking to me because I was explaining what was forex, and because we talked before, me and you, and I told you that my parents don't believe in this too. And he said he will give an opportunity to me. He will bring me to the bank where he has friends, and gonna put me during a week watching the how can I say, the
actual institutional trading.
Yeah. And
that's dope.
What the fuck? What's the name, man? The market room, something like this.
The trading floor.
Yeah, the trading floor. That where I can have a better understanding of the thing.
It's a completely different environment, bro. Trust. It's a completely different environment. And you're a lot more conservative about your risk.
This is a good opportunity for me.
Yeah, it's a dope opportunity. Go for it. What the fuck? Yeah.
Nice.
That's relatively what I'm trying to get into after college, after my licenses. You know.
Yeah. I mean, and about showing the profits, I didn't tell him who.
No, it's cool, bro. But I'm just saying.
Yeah, I understand you. And I showed him in my iPad. I didn't send to him. We were having dinner at home here.
Yeah, that's dope. My house, yeah. No, that's a dope opportunity though. Definitely go for it. So do you think once your account just? I mean, I already kind of widen my stop losses now. Like I don't really go for one pips anymore. In terms of overall, yeah, I'd probably do that. But the thing is if I'm gonna widen my stops, I'd probably just focus on less on M1, but focus more on M5, because you also have to consider like when you start trading extremely high funds, trying to drop a ton of lots at one time, you're gonna have a lot of slippage. Right, so if you see like 100 lots, 100 lots, 100 lots, 100 lots, and you see no slippage, then you know that's very iffy to me. You can't be throwing 100 lots, 100 lots, 100 lots with no type of slippage. That's too much money coming into the market, technically.
Slippage is like delay in entering the orders, right? Or no?
Yeah, slippage. Yeah, for example, like if I'm buying at where EU is right now, 1.21184. If I drop like let's say 100, 200 lots at once, it would probably jump up to like 21.18.8 or like 21.19 or 21.19. You know, It's not a big jump, but like when you're messing with 3-4 pip stop losses, that's a pretty big impact, you know.
I got you.
No, but yeah, that's a dope opportunity, bro. Definitely go for it.
So in terms of long-term investment, we arrive at a point in our lives, in our professional life, that the forex won't give us the amount of return that we aim it for because of the slippage, and we need to opt for another types of investments.
Wait. So can you hold on? I'm confused on what you're asking.
Okay, so basically I was trying to ask, for example, we have, imagine that we achieved our goal of 5 million trading account. We're trying to put we're trying to get the same percentage of returns that we are having when we have 1,000 accounts, right? Okay, so we arrive at the point where the slippage is so high, trying to put lots, the trading won't give us the same return that we had before. Can you understand what I'm trying to say? So you have to go to another types of investments.
I mean, I would say, here's the thing though, like the only reason why you're getting slippage is primarily because of leverage that you're using. Right? So like if you have $5 million, you wouldn't just put that in a trading account. That doesn't make sense. Like I said, like you know how the fund model I just told you about, the long short, you'd have to diversify your assets, right? And you have to prioritize what you know best. You know, like for example, if you're heavily knowledgeable on commodity trading, on how commodities move in a long-term basis, then you'd put like, let's say 20-25% of your overall portfolio inside of commodity trading. You can set aside funds to try to set up an AI, because obviously automation is the future. Right, and it really just depends on what you know, right, and who you're like. Obviously if you're trying to take that, you know, that's more so trying to act as a quote-unquote fund. But if you actually want to open a fund, then you need obviously a ton of regulations. Not regulations, but a ton of regulations, licenses. You need a board of directors. Right? You need a lot of stuff. It's not as easy as it's, you know, made out these days.
I got you.
But yeah, it's interesting though, because for example, slippage varies based on your broker. Like for the people that use Wildcats, right? If it doesn't matter what lot you're using, you're always seeing some type of slippage. But that's a good thing and a bad thing. A bad thing because obviously your accounts are being slipped, but a good thing because that's how you know it's a regulated broker. That's how you know you're actually getting A-book transactions. Right, because if you think about it, if you're in a B-book broker, let's say your trades are going into the trading desk and traders are going against you, right? Because your orders are not going specifically straight into the liquidity feed, right? The transaction's a lot more instant because you're going just straight to the broker. So once it reaches the broker, it's a lot more of a faster alternative, right? And your orders are placed immediately and you see no slippage, right? So there's a lot of stuff you gotta know, you know?
Yeah, I gotcha.
But yeah, definitely commodity plays are the move down the road though. Tangible assets are definitely the move long term. Gold's given us a very good retracement in terms of long term, so that's a very good type of trade you want to get into down the road. So everything just depends on your broker and depends on obviously the amount of money in your account. A friend of mine with Nigerian broker about 8 lots open a position about the pips. Yeah, bro, slippage can be really bad. Slippage can be really bad. Yeah, like you see, like I hope down the road I become the type of trader who like trade like this kind of. Let me see. Right, where I will literally be able to find these quote unquote POIs and just set a limit. right? 10 pips. Right? Because in the grand scheme of things, if you're trading hundreds of thousands of dollars at 1 to 30, when you're taking partials at previous highs here, 1, 2, 3, then you know that's a ridiculously big move. All right, let's say you're trading, do the math. So you're trading fucking 3 million. That's, all right, that's and let's say you're risking 0.15%. Put that. 3 million times 0.15. Oops, 0.0015. Right, you're risking 4,500 there, right? That would be essentially the risk profile. And if you're looking at a 130, I'd say like overall return, maybe 15%-ish. So maybe 15 times kind of after the partialing out. So 45 times 15, that's $67,000. $1,000 in the long run. You see what I'm saying? Right, you keep your profile extremely low, your profit's still there. Like that's investing. Okay, what does investing mean? If that's what you're saying, that's like investing. What does investing mean? And don't go on Google. Is it really risking money to earn money? Think about like overall, what is an investment? Like my definition. Well, let me see what you have to say first. I see. No, I say my definition of an investment is your risk against your reward. Whether that's money, whether that's people, whether that's assets, whether that's liabilities, whether that's a pet. Everything is like an investment to me. Whether it's owning a dog, whether it's opening up a business, whether it's having a new friend, whether it's making a new business connection, everything's an investment, right? And what's your risk? Time, energy, effort, money, anything you put into the table. You get what I'm saying? Yeah, so to me, all I see an investment as is the risk against the reward. Everything has a cost. But yeah, other than that, do you guys have any questions, or can we end it off here? This red ball at the texto is a Google extension. This what?
At the text box, you have a small ball under.
I think it's Grammarly.
But it's from the trading view, or it's from?
It's right here. It's Grammarly.
Oh, okay, thank you.
Grammarly. Yeah, I didn't know that. I mean, Grammarly works on like I think almost any website. But yeah, I guess we can just end it off there. Alright guys, I'll see you guys on Tuesday. I gotta go take care of a bunch of stuff.